Maverick traders. Welcome out to your currency recap for June 3rd. Corey here with you. Let's jump right in. So we always like to take a look at the news and how that impacts various markets. We're going to take the markets from a top-down approach, look at equities, look at currencies, look at crypto. Today we're going to especially focus on oil markets and how that impacts the CAD. And the CAD is probably the trade here for further weakness because oil looks really weak given a day like today.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so today I really think that today's focus is really on oil. I mean, we had some manufacturing PMIs. One came in and beat, one missed. Those are US based numbers, but oil fell sharply. We were down 4%, and that's a big move in the oil markets. And you saw oil currencies fall. You saw the CAD fall on the back of that. That, of course, is very correlated to it, and it just seems to be the area where there's some momentum. So as we look at today, CAD was the underperformer, closely followed by US dollar. And those two, I mean, part of what could be happening, there's announcements of strategic petroleum reserves being offloaded into the markets, trying to drive down oil prices and so forth. And when you have a lot of supply of something and not as much demand, well, prices go lower. But overall, nothing really bursting to the upside. Kiwi, Swiss franc, and Japanese yen, the strongest, those are not correlated currencies. Now, oil down 4%, gold was up nearly 1%, everything else fairly flat. If we look at crypto, I mean, a day like today where things were up 1.5%, flat, that's nothing in crypto markets. So not a lot of volatility there. Now, as we look at equities, we're still on this upward trend and upward trajectory. And one of the things that we focused on is this key technical level right here. And I'll drag a line across, and you can see this 5260 zone. Now, when I teach support and resistance, I don't teach as though support and resistance are a hard level. It's not like it's concrete. In fact, I find that most often you kind of squish into support and then spring higher. So I always like to describe support and resistance zones as trampolines. You know, if you land on the trampoline, it's going to go down and then it's going to spring you up. And that's pretty commonplace where you kind of sink into support and then get pushed higher. Now, this has attempted a bounce at this point from the support zone. That's important. We had a little shakeout underneath. Pullbacks do that, right? They shake people out. This 5260 level should not really be broken again. So the market's in trouble if for some reason we pivot down and start to come and break this again. Then you know that support is being broken. Why? Because you've set a lower swing high, a lower high here, and started to pierce support this second time. Coming in the first time and kind of springing off of that, pretty normal. Coming down and breaking below that, not so normal. And that would be your first sign of trouble. But look, we're above 5260. We had a key reversal right there on volume. It looks like the market wants to go higher, but you know what to watch for in case it's not doing so. This week, we've got a lot going on. We've got the Bank of Canada out on Wednesday morning. We know the CAD is falling. The expectations are that they begin to cut rates. One of the central banks starting to move. Expectations are they cut rates by 25 basis points. We also have the ECB. The ECB is anticipated to cut rates by 25 basis points. So the U.S. is not there yet, but other central banks are starting to move, or at least that's the market's anticipation. So if you're trading CAD, if you're trading Euro, this is a big week, and I'd expect some volatility. We've got employment data out of Canada and the US on Friday. Now, as we look at areas of interest, this is really the breakdown where you have more strength in pound and Kiwi, you have more weakness in US dollar and Canadian dollar. And look, that's the trend, that's the momentum, that's where there's some action. I like pairing up things that are strong with things that are weak, and I think CAD has every possibility of continuing to weaken. So maybe against the British pound. I mean, Kiwi and CAD can often be correlated pairs. So I would be looking more at pound CAD as a potential trade, and you would be buying pound and shorting CAD, of course. You could also look at US dollar. And if you're trading US dollar to the downside, you could really do that against either one of these, and it would make perfect sense to do so. Now, on the trading side, if we look at the Canadian dollar here versus these other currencies, it's a really clean chart. You have a descending triangle that had been forming. You have broken support. Notice the number of times that you kind of squished into this area. It has been broken, my friends. And as it breaks, expectations are that we will have lower highs and lower lows. So even when it tries to bounce, it's likely to set a lower high and then plummet again. For the foreseeable future, CAD seems like a downward trade. If we switch gears a little bit and go to the crypto markets, look, Bitcoin could be potentially carving out a nice bullish pattern here. Maybe a cup and handle could materialize, something along those lines. Here again, you've created a line of support that has been retested now on a couple of occasions. You do not want to see Bitcoin come back underneath this and break. That would be big problems. But right now, everything looks pretty healthy for Bitcoin. So we don't have a lot of volatility in the markets. Kind of interesting that oil got slammed so hard with that relative calm that's in most markets at this time. So that bears some watching. Is it a one-off? Does it continue going forward? Not necessarily so bearish on oil as just the Canadian dollar looks pretty weak, and that's one driver of that trend and of that trade. So continue to play relative strength and relative weakness. Hope you enjoyed the currency recap. We'll see you next time.